Hello, everyone. My name is Eric Duflo, and I lead consumer protection at CGAP. First, a big welcome to all of you to this webinar on mitigating digital finance risks for consumers in Sub-Saharan Africa. Please let us know in the chat where you're joining the webinar from. That will be great to see. And I'm now going to go through the agenda. First, our CEO, Sophie Sirtaine, will give us the opening remarks, after which we will have two short presentations, one on DFS consumer risk in Sub-Saharan Africa, and another one on CGAP's market monitoring toolkit that was just published in February. This will be followed by a couple of Q&As on the presentations. Then we'll have a panel discussion, and then some Q&As at the end from all the participants. So what about the logistics? You can either use the English or the French room, depending on the language that you are more comfortable with. There is an icon on Zoom that allows you to enter the room that you prefer. All the microphones will remain muted until we have the, well, actually throughout the event. And but you can share, everything you have, your questions and comments. Feel free to use the chat extensively. And please make sure that when you write something in the chat that you select all participants from the drop-down menu when you're sending your question. And finally, on the logistics, we're recording this webinar, so please be aware of this. And now I'm going to introduce the panelists and presenters. We have all their bios in the website for the event. I'll start with Sophie Sirtaine, who is CGAP's CEO. We have Madame Akuwa Dogbe Azoma, who is the Director of Payment Systems at the Central Bank of West African States, the BCEAO. We have Awelani Rahulani, who is currently the head of the Fintech department of the Financial Sector Conduct Authority in South Africa. We have Francis Guerre, who works as a senior financial sector policy specialist at the Financial Sector Deepening Trusts, the FSD in Kenya. We have Kennedy Kipkemboi. He's a senior mobile money regulatory specialist at the GSMA. And then we have Madri Chalwe Mulanga, who is a financial sector analyst at CGAP. And Juan Carlos Izaguirre, who is a senior financial sector specialist on financial consumer protection. So at this stage, let's welcome CGAP CEO Sophie Sirtaine, who is going to give us some opening remarks. Thank you and welcome, Sophie.
Thank you very much, Eric. Good morning, good afternoon, good evening, everyone. Bonjour à tous. It's a real pleasure to welcome you again to this seminar, who really comes at a very timely moment, given especially the very rapid growth in digital economies, in digital innovation, and in digital financial services in Sub-Saharan Africa that we have observed over the last many years, in fact, but especially during COVID. And the reason this seminar really is important is, of course, because, as you all know, these developments offer very fundamental promises for the region, but they also come with risk that need to be mitigated, understood and mitigated for these benefits to be reaped by all. And I want to start with, in a way, disarticulating what I just said in pieces. If we think, first of all, of the promise, the benefits, we've seen in the region, of course, a very sharp growth in mobile money. And we know that mobile money and digital financial services in general have undoubtedly helped previously unbanked or underbanked people in the region access formal financial services. We see these services really bringing people, especially those excluded, but also in particular groups such as women that have less access to financial services, or people in rural area, access the digital economy, access the services that they need, build resilience through these services, and ultimately improve their well-being. To give you a little bit of data on that, Research from Kenya estimates, for instance, that between 2008 and 2016, M-Pesa, of course, whom you know very, very well, has lifted almost 200,000 people out of poverty. That is about 2% of Kenyan household. And that is extremely large for a single firm and compared to the pace of poverty reduction overall. And we see that the impact has been particularly strong for female-headed household, which is remarkable. Digital financial services also help in the context of government cash transfers program. When these are shifted, in particular to digital delivery, we see that these programs can reach people who were previously excluded. An example of that for which there is research is Togo Novisi cash transfer program, which was fully digitalized in 2020, after which Novisi was able to reach vulnerable people in Togo's 200 poorest regions, which were previously underserved by these services. And of course, there's many more benefits. For instance, digital financial services are also used to support access to, for instance, solar or other energy efficient services where national grids are too expensive, for instance. So lots of promises, lots of benefits, but at the same time, risk. And there we have, again, a lot of data that we will discuss today in detail. But in particular, CGAP has produced in February of this year a review of the evolving nature and scale of consumer risk resulting from the development of digital financial services since 2015. We identified over 60 different consumer risks, some of which have increased in scale over the past few years, and some have simply become more complex. I think when you're going to hear a presentation from Marjorie on these risks, I think what's really important to realize, and what is worrying in this context, is the fact that the pace of development, of increase in these risks has surpassed the rate of technological adoption itself. So for example, between 2016 and 2020, we see that the share of fraudulent transactions through mobile apps more than doubled, while the share of these transactions has increased by a much lower 34%. We also see, and that's the second very worrying thing, is that low-income women and rural populations are likely to be more exposed to those consumer risks than other customers because of their lower level of financial and digital literacy in the first place. In fact, rural women are the most exposed. And of course, this is prevailing everywhere in the world, but including in your region. And we have data showing, for instance, that in Kenya, in Nigeria, we see where regarding emerging digital credit product and delivery channels, that consumers are exposed indeed to various risks, including mobile app fraud, as I just mentioned, but also privacy intrusion, abusive debt collection practices, and so on, which ultimately may result in over-indebtedness and very negative outcomes for consumers. We also have reports from Uganda, from South Africa, from Kenya about, for instance, fraudulent cryptocurrency-related scams. So really, the region is not spared from this development. Now, these developments are not a reason to consider digital financial services or mobile money as the wrong solution. To the contrary, we're very much of the view that the promise of these services is real and important for the region. But it really means that the risks need to be monitored, understood, tracked, and mitigated. And that's what we're going to talk a lot about today. So you're going to hear a presentation from Juan Carlos on some of the proposed solutions that CGAP has highlighted in a recent market monitoring toolkit, which is really addressed at regulators and supervisors whom we believe play a pivotal role in mitigating these consumer risks. And it's a set of tools and methodologies that they can use, again, as I said, to identify, understand, track, and mitigate market-level consumer risk. CGAP has also been working on the notion of a collective consumer voice, i.e. Mechanisms to ensure that the voices and concerns of consumers, especially vulnerable women, are better understood, better represented and understood in rulemaking. And we are, for instance, assessing how consumer advisory panels in some countries, including in South Africa, can help to influence consumer protection policy and regulation for better outcome for consumers. Now, what's really interesting is that in that context, technology really comes with a double-edged sword, in the sense that technology is at the heart of why these risks are evolving. But at the same time, technology can also be used to mitigate those risks. And we see interesting development using technology to track and monitor and mitigate risk. For instance, the Africa Digital Financial Inclusion Facility that was launched by the African Development Bank is helping financial regulators in Ghana, Rwanda, and Zambia using multilingual chatbots and artificial intelligence to monitor risk emerging from digital financial services. So I want to leave you with those thoughts and really conclude with the fact that this is really an important seminar. These developments that you're seeing in your region are fundamental. They can really turn the pace of inclusion and of growth in the region. But again, for that to happen and for sustainable development goals in a way to be supported by these technological development, risk need to be understood and mitigated. So I hope you will find this seminar very relevant and very useful to your work. And with this, I want to thank all of you for joining us again, and especially the organizers and the panelists for joining us today. Marjorie or Eric, over to you.
Thank you. Thank you so much, Sophie, for your opening remarks. And I'm being told we have over 170 participants, which is really great. Thank you, all the participants. And please continue telling us where you're coming from. It's great to see all the different countries, more than 10 countries on the list so far. And I'll hand over to Marjorie now.
Okay, thank you very much, Eric. At this stage, we'll talk about the evolution of the nature and scale of DFS consumer risk. So it is based on the research that we recently conducted, the one that the CEO mentioned. But before we go to the presentation, we just have one question for you, and we'll answer this question using Slido. So if you have your device, you can do this from your phone, your laptop, or any electronic device that you have. Just type in slido.com, and then you have to put in the code that you see on the screen, which is 196415. So go to slido.com, then you can type in the code 196415. And the question we have for you is, over the last 12 months, have you or do you know anyone who has experienced fraud, data misuse, a lack of transparency, inadequate complaints channels, network downtime, or agent issues while using DFS, digital financial services? So we have three answers there, as you can see. Could be that you have, or yes, you know someone who has, or it can actually be both, or no, you haven't and you don't know anyone who has. I'll give you 30 seconds to vote. Okay, so I can see already 22 people have voted. Just a few more seconds. Okay, can we take it up to 100 at least? So over the past year, have you or do you know anyone who has experienced fraud, data misuse, a lack of transparency, inadequate complaints channels, network downtime, or agent issues while using digital financial services? Okay, a few more seconds. Okay, so we have 48 responses. Okay, I think in the interest of time, I think this is okay. We can close the poll. Do we still have some more coming? Okay, let me give you another 10 seconds.
In the meantime, if you have questions, please put them in the chat. You can send them to Marjorie or myself or to everyone, actually, that's the best. You just click everyone and you send your questions because we will not take questions verbally.
Okay, so we see from the poll, if you saw the poll results, that majority of the people here have either experienced some of these issues, the issues that we'll talk about today, or you know someone who has experienced them. So that's it. Now let me go to the slides, the presentation that we have today. So before I go to the risks, I also just want to reiterate what the CEO said, that indeed digital financial services have benefits for users, for consumers. But before I talk about that, to just give a bit of context, at CGAP, we believe that we cannot expand financial inclusion in a sustainable manner if we do not mitigate consumer risk for digital financial users. And we know that digital financial services have contributed immensely to financial inclusion. So for instance, in Sub-Saharan Africa, we know that mobile money is the primary driver of digital financial inclusion. And of course, we've seen the benefits. So as you can see in Uganda, for instance, mobile money improved saving by 25%, the borrowing improved by over 20% as well. And even in terms of receiving remittances, this went up, it improved by over 80%. So we see even in other countries, in Kenya, a study found that households that use M-Shwari were 6.3% less likely to forgo expenses due to negative shocks. And then if we go to Ivory Coast, a study found that a short-term digital education loan product helps to increase children's education enrollment to 73% from less than 50%. So we see that indeed digital financial services have benefits for users. So as we speak about consumer risks today, we do not want to discourage people from using DFS because we know that digital financial services are essential for consumer protection. So that said, allow me to just go to the results of our research, the global research that we conducted. So in terms of what we found, by the way, to get to these results, we conducted a literature review, and we also spoke with global experts, regional experts, as well as people in country offices, including people in Sub-Saharan Africa. So we identified over 60 consumer risks, 60 to 66 to be specific. And because we know that most of these risks were kind of related, we decided to bucket them into 4 risk types, as you can see. So we have 4 broad risk types. The first type is fraud. It relates to fraud, and there you see examples such as SIM swap fraud, mobile app fraud, there are digital Ponzi schemes that have emerged in several countries. And of course, for the second risk type, which is data misuse, you see issues such as algorithmic bias, there are unfair practices, even issues such as data breaches that affect consumers, especially the vulnerable ones. Then we also see the third one is lack of transparency. We see examples such as undisclosed fees. And for the last one, the fourth broad risk type, it's inadequate redress mechanisms where you see complex redress processes. So now you see for the first 2, these are related to issues of cybersecurity. They have direct links with issues of cybersecurity. But for the other 2, we're saying these risks have increased, or digital financial services have exacerbated these risks. So lack of transparency has now become more complex because of the usage of digital financial services. Then apart from the broad risk types, broad risk types, you also have cross-cutting types, the 2 cross-cutting types relating to agents. Then the other cross-cutting type relates to network downtime. So as you know, agents are the bankers of the poor. So in Sub-Saharan Africa, if you talk about mobile money, you cannot avoid mentioning agents. And there we see examples such as liquidity challenges. And in some cases, there is also agent fraud. For network downtime related issues, we see examples such as distributed denial of service attacks. Now, let me talk about the increase or decrease in these risks. What have we gathered in terms of evidence? If we can move to the next slide, please. So in terms of the increase or the scale of DFS consumer risks, our conclusion is that the risks have increased in most cases based on the evidence that we got. So available evidence shows that since 2015, there's been an increase in scale of most of the risks identified by CGAP. So you see, for instance, fraud increased at the global level, even regional level, including in Sub-Saharan Africa, and some countries as well. Of course, we know there are a few exceptions. Data misusers also increased overall. And then, of course, if we look at lack of transparency, you see the orange arrows in this case show that we had literature to suggest an increase in volume of value, but we don't have supporting data. But where we have the red arrows, it means that available data shows an overall increase in the value of volume. And then in cases where we said not applicable, it means that we could not find reliable or sufficient quantitative evidence to quantify these risks. So overall, we're seeing an increase in these risks. Now, allow me to just take you through a few examples of some of the risks. So if you want to get more details, you can go to our slide deck, which has been published. It's on the website. We'll share the link. Maybe the link is already shared in the chat. Okay, so if we can just look at a few examples. I'll start with Kenya, because when we talk about mobile money, Kenya is the leader in Africa. And we know that mobile money has contributed immensely to financial inclusion in Kenya. So for instance, you see between 2016 and 2021, formal financial inclusion in Kenya went up to almost 84% from 75%. But we are also seeing that financial health is worsening in Kenya. So over the same periods, 2016 to 2021, financial health declined from 39% to 17%. And what is worrying is that mobile money users are the ones who face more challenges than other form of finance users. So mobile money is mainly accessed by low-income people and vulnerable people, including women, low-income women. So for instance, between 2019 and 2021, we see that mobile money account users who reported loss of money went up from 8.4% to almost 50% in 2019. And of course, if you look at the risk types like that I talked about within our typology, mobile money users experience more fraud than other DFS users, than other finance users in Kenya. So for instance, fraud was for them, it was at 37% compared with traditional banking at 3%. Apart from that, according to a recent study conducted by IPA, that's Innovation for Poverty Action, they found that multiple borrowing increased from 33% to 44% during the COVID-19 shutdown. So these issues are really concerning. Allow me to also just give you another example, if we can move south to South Africa, where I'll talk about SIM swap fraud. So when we talk about SIM swap fraud is not just in South Africa. Actually, according to the GSMA, it's a global phenomenon. You can find it even in developed countries. If you go to Europe, you go to America, you'll find this issue. But then what is worrying is that SIM swap fraud is more prevalent in the developing and emerging economies where we want to drive financial inclusion. So in the case of South Africa, we got some statistics from the South African Banking and Risk Information Center, SABRIC, because statistics relating to SIM swap fraud are quite scarce to find. So in the case of South Africa, you see that between 2017 and 2020, SIM swap fraud incidents increased by over 200%, whilst the mobile cellular subscription rate went up by 8.4%. Of course, you may argue that in terms of mobile cellular subscription, we've almost reached a saturation point, but we see that the risks are growing at a very fast pace. And what is also worth noting is that the mobile channel accounted for more than 90% of SIM swap fraud incidents in South Africa. So again, of course, we know that in South Africa, mobile money is not usually used, like if you compare with Kenya, it's not widespread. But of course, we know that a lot of people are accessing financial services through the mobile channel. So in other countries, it has been noted, for instance, in Mozambique, one of the largest banks had a monthly average of 17 SIM swap fraud incidents per month. So you can imagine at one point, some of the customers actually started thinking the commercial bank was conniving with the mobile money company to steal money from customers. Now let's also look at a few other examples. If we can move to the next slide, please. A few other examples. We talk about risks in the COVID era. As I said, if you want to learn more about these risks, you can also read the comprehensive deck that we shared in the chat. So what we've noted, according to the Cambridge Center for Alternative Finance, 40% of the regulators who were surveyed, they conducted a survey in 2021. They found that Sub-Saharan regulators perceived an increase in fintech. 40% of Sub-Saharan regulators perceived an increase in fintech-related consumer protection risk. If you compare that with the global average of 13%, it means that Sub-Saharan Africa is more likely to experience some of these risks. So we look at some of the examples. For instance, in Nigeria, we talk about issues of abusive digital credit-related practices, debt collection practices. We thought these issues were just in markets like Kenya. In Kenya, they were reported even before the pandemic. But during the pandemic, Nigeria also experienced some of these issues. And based on a report from Zambia, the Consumer Protection Agency, CPCC, also reported an increase in the number of complaints related to digital finance scams. That's during the pandemic. So we see that COVID-19 also has contributed to some of these risks. So last but not the least, let me just give you some voices of DFS users in Sub-Saharan Africa. This is what people have to say about some of these services. So here we've removed the names, but if you want to read more, there's a report that was done by the IFC. This is where we got these voices from. So for instance, this street vendor from Cameroon says, this mobile money company deducts airtime credit from my phone. So I am afraid that if I open a mobile money account, the company will do the same with my money. I don't trust this MNO. Then we hear from another anonymous user in Zambia who says it's difficult to trust that your money is safe with the FSPs, the DFS providers. So with network problems, you're not sure if it is true that they have network problems or it is just your money that they do not want to give you. Then we hear from this shop assistant in Senegal, Dakar. He says, I stopped using mobile money because there was no security. Once someone stole money from my account and there was no way to find out who had withdrawn it. So you see, if we do not mitigate these consumer risks, we may actually reverse the progress that we have or slow down the progress that we've made in advancing financial inclusion. So for the last part, I'll talk about the issue of over-indebtedness, which has become more complex in the digital era, as you will see. So I talked about issues in Kenya, and of course, even Nigeria, where we've noted the emergence of digital credit apps. So now let's look at the journey of a customer who is using a fraudulent digital credit app, because these have been noted. And by the way, this is not just in Africa, because even in other markets, if you go to India, these issues have been noted. So this flow is based on a study conducted by SPTF in conjunction with Microsoft Consulting. You see, it starts with a lack of transparency and also the issue of fraud. So it's a case where the customer is home, they have a phone, they're using their digital device, and they get an unsolicited marketing message. So the message gives them product features, describes this product, which sounds so good to them. For instance, maybe they can tell them that you'll be paying an interest rate of 10% per month. So the customer trusts the app, which uses a prominent, in most cases, they're using prominent people's names. That was the case in Kenya, in this example, in this instance. So they may use the name of a politician or even a musician. So if this app is associated with a prominent person, the customer downloads it because they think if it's associated with a prominent person, then it is safe. The customer doesn't understand the terms and conditions. Most of us, as we're downloading apps, usually we don't read those terms and conditions. So before they know it, they permit the app to access their data. And the data that's been accessed in most cases, it could be the contact list, photos, including the GPS location. And then if in case the customer fails to repay this loan, agents will start calling them, because most of these digital lenders don't have loan collection, debt collection officials of their own. They would employ agents. And these agents are given unrealistic targets. Because of the unrealistic targets, they are forced to call customers or even customers' contacts repeatedly. Now, if the customer does not want to, if the customer wants to avoid embarrassment, they end up obtaining another loan to repay the existing loan. And in the end, they may end up with several other loans, and they'll find themselves in a vicious cycle where they are just borrowing to repay the existing loans. So it means that if you're just borrowing to repay loans, they can't invest, they can't do any business. In some cases, as we found in Kenya and of course in Tanzania, people have ended up pulling children out of school, or they've forgone medical expenses. So just to reiterate, digital financial services consumer risks are growing, and they are growing at a very fast pace. As our CEO pointed out, in some cases, some of these risks are actually growing faster than the rate of technological adoption. If we do not take proactive measures, we may end up slowing down financial inclusion progress that we have made. I'll end here for now and just hand over to Juan Carlos, who will talk about some of the solutions that CGAP is currently working on. Thank you very much for your attention.
Thank you very much, Marjorie. And my warm regards to all the participants joining this CGAP webinar from all over the world. In the next couple of minutes, I'll share with you the online market monitoring toolkit that CGAP has just released this year. We believe that this toolkit can be very helpful to financial consumer protection supervisors looking for practical solutions to address consumer risks in digital finance. At the same time, other stakeholders can also benefit from the toolkit as they can support the monitoring actions of supervisors. The toolkit aims to raise awareness on the importance of carrying out market monitoring activities to support customer-centric consumer protection. Market monitoring is an activity that helps to identify, understand, and track industry developments as well as consumer risks, behaviors, and consequences at the market level. Thus, market monitoring shifts the focus of supervision from individual providers' actions to financial consumers' experiences across multiple providers in a sector or market. By taking a broader look at a sector and its consumers, market monitoring is especially useful in digital finance, as it contributes to identify innovative products and services and the consumer risks and benefits they are providing. Further, by looking at how consumers are actually using and benefiting from financial products, market monitoring supports customer-centric consumer protection that focus on customer outcomes and financial health. Market monitoring also supports risk-based conduct supervision because it enables supervisors to identify consumer risks across individual providers and products, and therefore better prioritize supervisory efforts. Now, I'll briefly walk you through the different components of the toolkit. The toolkit starts with an introduction that briefly focuses on the benefits of market monitoring and also how to use the toolkit. The second part provides detailed guidance on the use of a range of practical monitoring tools. In particular, we focus on 8 tools that you will see in the screen. Analysis of regulatory reports, analysis of complaints data, phone service, social media monitoring, analysis of consumer contracts, mystery shopping, industry engagement, thematic reviews. For each tool, we present its technical characteristics, practical steps to implement and adopt the tool, benefits and opportunities, and reflections on limitations and implementation challenges. You can look at each tool guidance directly online in your computer or mobile phone, or download the information in a PDF to check it out later. The toolkit also includes country cases, as we'll see in the next slide, that illustrate how the tools have been implemented in specific contexts. Currently, we have these 6 cases that show how supervisors, consumer associations, and market facilitators have contributed to market monitoring. Each one illustrates a different kind of tool and goes into detail of the purposes and incentives of the tool, the technical methodology of how they have been implemented, the staff expertise and other requirements, aspects of vendor selection and costs, benefits and impacts, limitations and implementation challenges, future plans for the tool, as well as the main learnings of the application of the market monitoring tool in each specific country. We actually have two interesting cases coming from Sub-Saharan Africa. From Tanzania, we have a case on how the Bank of Tanzania, CGAP, FSD Africa, and FSD Tanzania collaborated to analyze granular transactional data on digital credit. This helped identify a set of emerging consumer risks, especially on transparency, creditworthiness, and bias. Then from Kenya, we have a case on the use of phone service to help the Central Bank of Kenya understand the size of the credit market, the use of digital credit, customer experiences with digital credit, and related risks. Just like with the guidance for implementation tools, these cases are available as online resources and PDFs. Finally, the toolkit also has a section on taking action. This includes a few methods to help market conduct authorities identify where they are in their market monitoring journey, assess how they can incorporate market monitoring into their regular activities, and how they can ensure they have a solid foundation for market monitoring. And finally, how they can select an effective mix of tools. This section also includes ideas on how other stakeholders and supervisors can support market monitoring. The final part of the toolkit is further resources, which includes frequently asked questions on market monitoring and on SupTech. References on what standard setting bodies say about market monitoring, and additional complementary resources. We recommend that new readers who are less familiar with the concept of market monitoring explore the different sections in the toolkit in order from left to the right tab in our website. So go check out our market monitoring toolkit in the address that you've seen in the chat, and feel free to share your feedback with us. Thank you very much.
Thank you so much, Juan Carlos, for this very good presentation, and also to Marjorie. So we've had a few questions in the chat. We've started to respond to these questions. There is one that I have not addressed yet. Maybe we can ask Marjorie. And it was a question, let me check. There was a question from Séverin, and in French, he was asking in the countries that are mentioned where people are victims of frauds, what are the other specific frauds for people who are in situation of handicap? For example, people who are blind, or people who have mental illness. So Marjorie, can you respond to this question, please?
Okay, yeah, sure. Thank you very much for that great question. So from what we noted when we conducted this research, we did not go we focused more on the vulnerable segments, two vulnerable groups, that's the women and people in rural areas. We did not go further to look at like the people who are handicapped. So I think they are more likely to face the same risks that other vulnerable segments face, but that would require further research. So as you have seen, in terms of the methodology that we used, we just looked at literature and also spoke with experts. We feel that there is need to conduct more research. And the good news is that CGAP has actually already started doing this. So currently we are conducting research in Ivory Coast, but would like to urge other researchers here. And of course, even the funders, because we know that research costs money. So if funders can also support such research to gather more evidence at country level. But I think they would also face similar risks, such as SIM swap fraud. But in some cases, maybe discrimination could also be another one, because we've seen it among women. So yeah, I think more research is required. Thank you.
Thank you very much. And one question for Juan Carlos about mystery shopping. So this is one of the tools that you mentioned in the toolkit. What are some of the limitations of mystery shopping, Juan Carlos?
Thank you very much for the question. I think there are a few important limitations and challenges to keep in mind. First is that mystery shopping, like several other qualitative studies, are not statistically representative and cannot be used with that purpose. It gives you good anecdotes and very important information about real life experiences of consumers, but they don't fully are statistically significant or representative. So it's useful to give these ideas, but it's not to be used for quantitative precision. Another important point that to consider is that this requires some level of resource involvement. So in some cases, regulatory and supervisory staff may not be able to have all staff needed to do the mystery shopping. At the same time, this entails that supervisory authorities can hire specific firms to delegate that activity. So it's just a couple of important points to consider.
Thank you, Juan Carlos. There are a few more questions, and maybe I'm just going to take one more. The other one, there was some great questions in the chat from Shabtai, which I have answered in the chat, and there is just one that came up from Herman Fongum, who wants to know if we have, if we have tools to measure vulnerability of customers. Maybe we can just say one quick word on the debt stress, the stress work, Juan Carlos.
Surely, we have just started to conduct a new research last year in Kenya to try to identify indicators of consumers' financial stress through a set of short questions that can be posed to new consumers or already existing customers of financial institutions. And just by posing those short questions, we've been actually able to identify high levels of financial stress in a current digital credit, microcredit provider. And we believe that with further use of this tool, we can get into more information of level of stress of customers.
Very good. And maybe, Juan Carlos, we can share the blog in the chat. And we're going to move to the next part of our agenda. And I'm going to invite, our panelists. We have heard from Marjorie's presentation that digital finance has introduced new risks and exacerbated some pre-existing risks. So the first round of questions that I have for our great panel is more focused on the risks, and later on we'll go into the solutions, of course. But first on the risk, question for Madame Azoma. Madame Azoma, I'll speak in English if you don't mind. What kinds of DFS consumer risks are you dealing with at the Central Bank of West African States, the BCEAO? And how do these risks affect DFS consumers in the West African Economic and Monetary Union, the WEMU region? La parole est à vous. Madame Azoma, est-ce que vous êtes avec nous?
Oui, je vous remercie, Monsieur Duflo. Bonjour à tous. Alors, dans l'UMOA, ce qu'il faut déjà souligner, c'est que les risques les plus importants que nous avons constatés sont les risques dont les causes sont liées à des incidents dans les procédures, à un personnel ou à des systèmes défaillants. Ce qu'on s'accorde à nommer en tout cas comme un risque opérationnel. Et la conséquence de ces risques-là, souvent, ce sont des pertes financières. Donc, c'est de cette manière-là qu'ils affectent les usagers. Aujourd'hui, ils représentent 57% de l'ensemble des risques que les prestataires de services financiers numériques déclarent à la Banque centrale. Et nous avons été heureux de constater que nous avons une convergence avec l'étude qui a été faite par rapport aux consommateurs. Nous travaillons sur les risques déclarés par les prestataires de services financiers, mais nous avons également constaté que la fraude était l'un des risques majeurs. Et en particulier, les fraudes qui ont été citées, notamment le SIM swap fraud. Et en termes de pertes financières, nous avons dénombré 945 000 cas déclarés en 2021, avec un impact de 1,6 milliard, 26 milliards de francs CFA. Donc, voilà ce que nous pouvons dire. Donc, des pertes financières comme impact au niveau des usagers et une certaine défiance à la suite de ces cas de fraude vécus, de ces difficultés de fonctionnement des services. Parfois, c'est de la liquidité qui manque au point de distribution. Donc, voilà ce qu'on peut dire sur les risques majeurs au sein de l'UMOA. Je vous remercie.
Merci beaucoup, Madame Azoma. C'est très important. Oh, sorry, I should switch to English. Thank you very much, Madame Azoma. This is very interesting, and this is sadly, corresponding to what we have heard also from the rest of the region, the increase of fraud. So now let's go to Awelani. My question for you, Awelani, is what are the risks that are on the Financial Sector Conduct Authority radar, especially those that affect vulnerable customers, especially women, if you have some information on this?
Sure. From the FSCA perspective, there are two major risks that are currently on our radar. I'll mention the risk and dive into the specific examples. The risks are around fraud and data misuse. Around both fraud and data misuse, just to give an example, there is a risk of web scraping that we are seeing emanating. To give a practical example of a web scraping, it's like, for example, I log into the bank account and I want to make a payment. I'll get a message that will say to me, do I want to make instant payment? If I choose yes, then automatically a logo of my bank will appear where I'll put in my details and then make that payment. However, what the consumers normally don't know is that it's actually the third party. It's not actually their bank. Immediately they put in their login details, the web scraper took over the session and concluded the transaction. So there have been a lot of complaints from the banks regarding that. And then as a result, we have even issued a cautionary note together with some of our central bank partner, warning consumers about this risk because it's a serious risk that pose a lot of risk to consumers, probably around fraud, where their account can be compromised, and data misuse, where their data can also be taken and used for some nefarious reasons. Another risk that we are seeing eliminating is still around fraud, which is basically in South Africa during the past years, we have seen an emergence of crypto sort of assets. Consumers have adopted those products at an alarming rate. And as a result of that, there have been also an emergence of a lot of Ponzi schemes and some very rogue players in the market who are also taking advantage of the fact that the space is currently unregulated. So that's under our radar. And as we are speaking at the moment, financial regulators in South Africa have came up together and come up with a position paper around crypto with the intention of bringing those activities within the regulatory spheres in the upcoming years. Those are the views that I can share around South Africa.
Thank you so much, Awelani. Very interesting. And I have to look at your paper. It sounds that it could be very useful if you can share it, not just for us, of course, but for all the participants, if it's public, of course. So now let's move to Kenya with Francis. So Kenya is obviously one of the most advanced markets in Sub-Saharan Africa in terms of the most advanced, actually, markets in Sub-Saharan Africa in terms of mobile money. Lately, there's been an emergence of digital credits in Kenya in the last few years. According to reports, this digital credit is exposing consumers to over-indebtedness. Can you shed more light on the issue of digital credit in Kenya and how it's affecting people, customers, please, Francis?
Thank you, Eric. And of course, we already heard from Marjorie about how digital credit, fraud issues with digital credit can lead to over-indebtedness. But we also have survey data that shows that digital credit usage is higher than the use of non-digital credit. And whilst overall financial health has tanked in Kenya between 2019 and 2021, we are seeing that users of digital credit are less financially healthy than non-digital users. However, if we zoom into what constitutes financial health, of which over-indebtedness is one of the indicators. We see a more mixed picture between users of digital credit and users of non-digital credit. More users of digital credit are in default and are more likely to have sold an asset to repay their loan compared to non-digital users. On the flip side, usage of digital credit is higher amongst urban than rural users. It's higher for those who might be considered wealthy and among those who are employed or are business owners. But at the same time, those with non-digital loans have more loans than those who have digital loans, suggesting lower levels of loan stacking among digital users. As such, whilst we are seeing more loan distress among digital users, it is difficult to ascertain whether it's wholly attributed to the type and nature of the loan or due to other distress factors. And I think it's plausible to assume that digital credit will be accessed by somebody who is already under some form of distress. Thanks, Eric.
Thank you very much. Thank you very much, Francis. That was very interesting, and I think several participants have heard about Kenya already on this. Kennedy, I have a question for you also. As Madri mentioned during her presentation, there is a paper on GSMA that is called Mitigating Common Fraud Risks. Maybe we can share it. And it mentioned that while SIM swap fraud is a global phenomenon, it is mostly frequently observed in developing countries. So how prevalent is SIM swap fraud in Sub-Saharan Africa? And are there other risks that mobile money users are facing in the region?
Thank you, Eric. That's a very interesting question. And yes, as we noted earlier in the earlier presentation, there continues to be increased digitization of the payment space, thanks to mobile money. And as we continue to witness this increased digitization of the payments ecosystem, there are associated risks, and SIM swap fraud is, of course, one of them that we have witnessed. Now, the issue is there are certain variations in how SIM swap fraud happens and how it is initiated. These, of course, include either PIN or password compromises. In other cases, it could be a combination of social engineering activities by fraudsters. So yes, we have seen this, and it has been on a rise, especially around the COVID-19 period, maybe because there was heightened digitization around that time. But what I want to single out is that social engineering is mostly the biggest challenge that we have seen amongst the users in the region, partly because of low literacy levels and particularly financial literacy. Of course, mobile money industry players have put in place mitigations to address these challenges with a strong focus on customer education, because customer education is indeed key for a region where financial literacy is still quite low. And thankfully, law enforcement officers have also been swift in addressing the cases that we have seen. And this is also sort of helping to mitigate the issue and also contributing to the decline that we are almost observing currently as an industry. It is, however, very important to realize one thing, that SIM swap fraud threats do not emanate exclusively from the telco side or from the mobile money industry, and that compromises that we have seen also may emanate from the wider financial ecosystem. We've seen cases where, for instance, the compromise emanated from banks and ended up being on the telco side of things. So as a result of this, I think there's need for a collective effort by all DFS ecosystem players in addressing these issues, including regulators, because really it's not one thing that can be left for one industry only to tackle. But also just to mention some of the issues we're seeing around fraud and consumer protection are not really on SIM swap only. We are seeing other risks around systems and cybersecurity risks, which of course the industry tries to mitigate through security credentials, security assessments and system audits, and firewalls as well, which have been very key in mitigating non-consumer facing threats that we have seen. Of course, there are also isolated cases of staff and agent, as well as partner or customer level fraud, which the industry has swiftly also addressed. When I talk about the industry here, I'm talking about the mobile money industry. They have been able to address this swiftly, either through fraud detection, reporting mechanisms, and of course, staff training, which is also very important, particularly around KYC, AML, CFT, and general handling of consumer funds. As we mentioned earlier, we've done a report which touches on this, which I will share with the audience.
We put it in the chat. So,
yeah.
Kennedy, I'm going to ask that we move to the next part, if that's okay with you, because we're going to talk about the solutions in a second.
All right.
Yeah, I see we're getting into the solutions. So let's move into the second part of the panel, and I'm going to ask Madame Azoma, how is BCEAO helping to mitigate consumer risks? Madame Azoma, are you with us?
Sorry, she's on mute. She can just unmute.
Oui, je suis bien en ligne. Je n'avais pas activé mon micro, excusez-moi. Je vous remercie pour la question. Les solutions pour la maîtrise de ces risques, elles viennent de deux axes principaux. On peut dire que le premier axe est caractérisé par les mots incitation, prévention et contrôle. Et cet axe cible particulièrement les prestataires de services financiers qui sont nos assujettis, alors que nous avons un mandat pour préserver la confiance du public dans les instruments de paiement. Donc, dans ce premier axe, il s'agit pour nous d'inciter les prestataires de services financiers numériques à connaître et à gérer leurs risques, ce qui nous conduit à leur demander de déclarer tous les risques qu'ils anticipent par rapport à leur offre de service. Donc, dès le moment où un prestataire demande l'avis de la Banque centrale sur un produit à lancer, il lui est demandé de procéder à une analyse de risque. Donc, c'est une démarche d'incitation à connaître le risque et à le gérer pour qu'en bout de chaîne, le consommateur final soit protégé. C'est également une prévention, évidemment, parce que nous intervenons en amont des difficultés, j'allais dire. Et il y a également un contrôle qui est fait par les superviseurs de la Banque centrale, donc qui vont, au niveau de la commission bancaire, vérifier sur place que les prestataires, ce qu'ils nous ont dit avoir mis en place en termes de dispositifs de gestion de risque, que cela est effectif et que cela est efficace. Donc, l'outil principal qui nous permet que nous arrivons à élaborer donc, dans cette incitation-là, c'est une cartographie sectorielle des risques liés à l'offre de services de paiement adossés à la monnaie électronique. Donc, lorsque chaque acteur, chaque prestataire déclare ces risques et comment il les maîtrise, nous consolidons toutes ces déclarations-là pour mettre à la disposition de l'industrie une cartographie qui peut être utilisée d'une manière préventive ou pour relever le niveau de maîtrise globale dans le secteur. Donc, voilà pour le premier axe qui cible les prestataires de services financiers. Le second axe cible davantage donc, les usagers et concerne leur éducation. Le fait donc de concevoir, donc il y a un programme régional d'éducation financière qui a été conçu au niveau de la Banque centrale et qui est en cours d'implémentation, avec comme objectif de donner aux populations les connaissances qu'il faut pour pouvoir, je dirais, faire face aux différents cas de fraude qui surviennent, ou faire face aussi bien aux incidents qui peuvent provenir des autres, donc des distributeurs qui ne sont pas droits ou d'autres personnes qui les appellent pour leur faire faire des transactions contre leur gré. Donc, nous avons deux approches dans cette éducation. Une approche par la formation, donc qui est plus systématique, qui vise en fait à intégrer dans les programmes scolaires, des programmes de formation, des éléments d'éducation financière, et une approche par la communication, je pense qu'il pourra vraiment être enrichi par les éléments que notamment le CGAP peut faire ressortir au niveau des usagers, une approche avec des messages d'information et de sensibilisation, avec la vision d'avoir une campagne donc, de sensibilisation du grand public. Donc voilà un peu ce que fait la Banque centrale. elle incite, elle supervise, elle contrôle et elle travaille par rapport aux usagers, à leur éducation, à leur conscientisation pour qu'ils soient mieux armés face aux risques liés aux services financiers numériques. Voilà ce que je pouvais partager avec vous.
Merci beaucoup, Madame Azoma. C'est une stratégie très... Oh, sorry. Thank you very much, Mrs. Azoma. This sounds like a very comprehensive strategy and very interesting. Thank you. Awelani, FSCA in South Africa is one of the few regulators in the world that has adopted the customer outcomes approach to consumer protection. Please tell us, how has this customer outcomes approach helped you so far in your work, or any other thing you'd like to mention about solutions for managing consumer risks?
Sure. Yeah, the customer-based approach has actually helped us a great deal. What we have seen as a result of it is that there is now a clear communication that is being disseminated in our financial system. So the information is very clear to the consumer as to before they can even adopt and sign the dotted lines on this product. And most of them seems to be like, yeah, getting educated and literacy regarding the do's and the don'ts of this digital financial services. We are also seeing that there's a lot of what I can say suitable advices that is being disseminated into the market as a result of that, whereby consumers, they are able to get proper advice that is in line with their circumstances, whereby we are avoiding the issues of recklessness. So people are able to get advice and be able to proper advice and make decisions based on an informed perspective. We are also seeing that the issues of performance and standards, I mean, normally there's an element of false information around these digital products. Some of them, you find that there's misleading that is happening around adverts and all of that. So, but now what we are doing with this consumer outcome approach, we are seeing that the products that are being sent out there and that are being advertised, they are actually offering the exact message which they are saying as they're being advertised. So there's a reduction in that element where consumers are finding themselves being misled. And we are also finding that there's that culture now of confidence when customers are dealing with this financial institution because of the information that is available there. We are another good things or another best thing outcome that has come out of this is around the issues of claims and complaints. Normally you find that when the consumers sign or sort of take a particular product, it's very easy for them to sign and have the product, but come the time to make a claim, for example, in an insurance, come a time to make a claim, come a time to cancel the contract, they normally face a lot of hurdles and barriers. But as a result of the approach that we have adopted now, we find that it becomes even very easy for consumers to large complain if they are not happy about the product, cancel the contract as they wish, and also even claim if the time permits them to make such a particular claim. So these are sort of some of the factors that we are seeing at play as a result of the approach that we have adopted.
Very good. Thank you so much. Thank you, Awelani. I'm keeping one more question for you if I have time a bit later. So let me move to Kennedy and GSMA. So GSMA's mobile money certification is meant to promote safe and more transparent delivery of digital financial services. Can you tell us a bit more about this program and how it has helped MNOs to provide better outcomes for customers, especially women?
Yes, thank you, Eric, for that. So as you rightfully say, the GSMA mobile money certification is a global initiative driven by the GSMA to bring safer, more transparent more resilient financial services to the millions of mobile money users worldwide. I think as per our latest report, we have up to 1 billion registered customers. And so really there's the need for the industry to be more proactive in driving transparent and safe use of mobile money services. Now, we have provided a quick guide on the same, which I think the audience can also look at. But the GSMA mobile money certification is made up of principles, which are further broken down to up to 300 criteria, defining best practices in financial services, and more specifically to mobile money services. The certification covers a number of very broad spectrum of risks, including financial crime. We also look at fraud, consumer protection in totality. And of course, this works in a very closely knitted framework with a high level of interdependency, though these principles are not independent, so they work very closely together when you're implementing them in the process of certification. Now, one thing I have to highlight, of course, is that being certified does not mean that mobile money providers are risk-free. Risk and financial services are inseparable, and no certification scheme can claim to eliminate risks entirely. So I think that's a disclaimer that I want to actually raise here. However, certified organizations have shown that they have the best systems to be able to identify, to mitigate, and to manage these risks. So we have a number of principles which directly touch on mobile money services. So for instance, on the user funds, of course, we understand mobile money is normally kept in a trust fund. So one of the things that we look through the certification is whether providers have taken adequate measures to ensure that customer funds are never lost within that trust account setup, particularly around insolvency, because insolvency can happen, and we have seen it happen in certain markets. So this is able to give them as a guidance to be able to mitigate that. The other example I can use as I finish is on fraud management. Providers are expected to develop very effective policies around AML/CFT compliance. So they have to understand which kind of customers they have within the network. You cannot have a mobile money customer or a line which is not registered. And of course, they have to also demonstrate high levels of AML/CFT compliance. Regarding women, agents are playing a very important role in consumer education, particularly for women, because we have seen in certain communities that women may not have that access to front level customer service, or being able to even visit urban centers to be able to get services from, main banking institutions and whatnot. So agents are playing a very important role in that front as well through the certification. So I hope that captures it, but we have shared the document.
Thank you, Kennedy. And indeed, I think the last point you made on agents, very relevant, because a lot of poor people use agents. So making sure that agents provide the right service is indeed critical. Thank you, Kennedy. We may have more questions later. Let me go to Francis now. So Francis, Kenya has recently issued the Digital Credit Providers Regulations. What are these regulations about, and how do they help to protect digital credit users?
So in March of this year, the central bank published regulations that provide for the licensing and oversight of previously unregulated digital credit providers, who are now required to apply for a license within 6 months following the publications of the regulations. So this is expected to be around September of this year. So the regulations provide for a licensing framework, like I've mentioned, fit and proper requirements and other consumer protection related provisions, such as dispute resolution, disclosure of costs, terms and conditions, false advertising, etc. And all this is certainly a step in the right direction. However, we do know that the presence of regulation aimed at improving market conduct is usually just one half of the solution, the other being the effectiveness of the supervisory mechanism to ensure compliance with the said regulation. So in Kenya, the central bank is already overseeing more than 40 banks, around 13 microfinance banks. It oversees the credit information sharing mechanism. Already there are some conduct issues with those types of providers. And here you are looking at adding around maybe 50 odd digital credit providers within that mandate. So as much as we now have regulations, we hope that they will be merged by an enhancement in the central bank's own supervisory capacity in terms of know-how and also headcount.
Thank you very much, Francis. Okay, so I think I will see if we have more time at the end for more questions. But what I would like to do now is to open it up to participants' questions. I'm going to ask a bit of help here because I was taking notes on what the panelists were saying and not following the chats as well as I would like to. So maybe Marjorie, or I have a couple of questions, but can you mention that I took note of, but can you mention any questions that are still unanswered in the chat, please?
Okay, so there's one question about split transactions. How is the rest of Sub-Saharan Africa dealing with agent fraud practices on mobile money, where an agent will split a deposit, say of 1,000 to 10 equal denominations of 100 to get additional commission of depositing the whole 1,000 at once? I think this one hasn't been answered.
Okay. So I guess it's about how to avoid, is this considered a fraud though, or is it just a trick to, yeah, it is a fraud, I guess. So is there anything by any chance that some of you, the panelists, are doing to better manage agents' behavior and frauds? I mean, the liability is usually with the provider, obviously. Kennedy, do you want to say a word on this?
Yes, maybe perhaps speaking on behalf of the mobile money industry. Yes, I can confirm that those are cases we've seen in some certain markets. However, it's not really directly linked to a fraud that would affect the customers, but really it's a corporate fraud because they're really trying to steal from their partners who are mobile money providers. But usually mobile money providers and agents have contracts which clearly stipulate the terms by which they can work together. And one of the things that I know mobile money operators are doing, of course, is to be able to monitor this closely through mystery shopping, for instance, to be able to confirm whether this is indeed happening and to take action within the contractual framework. But I think most importantly, I think agent training is also key. We are seeing a new crop of agents who are also entering the sector, given that agent networks are very important for mobile money industry. And there's a continuous training that continues to happen with all these agents to ensure that they avoid these mitigations. Where, of course, as I finish also, mobile money providers are also looking at ways of compensating agents ably to avoid this happening. And this is, of course, market by market.
Very good. Thank you, Kennedy. There is a question for Madame Azoma in the chat earlier on. There are actually several questions for Madame Azoma. Alors, I will read you the question. Well, I have to speak English. So the question is, will the institutions providing digital financial services benefit from the elements of financial education that you mentioned? Est-ce que l'éducation financière va bénéficier justement à la finance digitale?
Oui, bien sûr. Bien sûr. Le périmètre de l'éducation financière, ce n'est pas tellement le domaine, mais ce sont les usagers. Donc, il s'agit de leur apporter la connaissance qu'il faut à 360 degrés par rapport à la question financière, quel que soit le type de service qu'ils seront amenés à utiliser.
Yeah, very good. There is another question for you, Madam Azoma, which is about people with handicap. And I don't know if this is something that BCEAO is looking into, but this was, there was a question earlier on people who have who are blind or have handicaps. Is this an issue on which you're exploring or working for this particular segment of the population?
Encore une fois, je pense qu'aujourd'hui, nous n'avons pas encore désagrégé les données de manière à pouvoir capter de manière fine l'exposition des différentes catégories de population au risque liés aux services financiers numériques. La première étape donc, où nous sommes, c'est déjà de bâtir donc, ce dispositif d'incitation et de prévention et de contrôle. Et certainement dans la poursuite avec la mise en place du programme d'éducation financière qui vise en fait l'ensemble de la population, nous serions probablement amenés à affiner, à voir quels sont les usagers les plus exposés et à justement cibler davantage notre action. Mais j'y reviendrai en fin de panel. Je vous remercie.
Marjorie or other colleagues who are organizing, any other questions that you have that you want to ask the panel?
There's another question from Ephraim. Let me just read it out. So he says, could the presenters explain the unique ways in which the region is affected by problems? That's fraud is a global problem. What makes the issues in Sub-Saharan Africa different? How does the fraud and other problems impact development and economic growth?
It's like two questions in one, from what I understand. I think I started to respond this question in the chat earlier on, but actually, Marjorie, you may have something to say on that based on your research.
Okay, yeah, I can respond to that. So based on the research that we've conducted, if you look at Sub-Saharan Africa, as I mentioned earlier, issues of cybersecurity are quite rampant. They are worse in Sub-Saharan Africa. And based on the survey that I shared, you saw that even in terms of the regulators, they know that these consumer risks are more likely to affect people in Sub-Saharan Africa. Why is it like that? Because if you compare with other regions, generally, the people in Sub-Saharan Africa, especially women, in most cases have lower digital and financial skills. Of course, we know that this is a global problem, but it's one of the contributing factors. And then even in terms of cybersecurity, so you see already there are institutions that are implementing like regional cybersecurity centers. We've seen, for instance, already the African Development Bank is doing that because we know that the countries in Sub-Saharan Africa may not have adequate resources to address issues of cybersecurity. So it's unique to Sub-Saharan Africa. And then the other issue is that even just in terms of financial inclusion, if you compare with other regions, Sub-Saharan Africa is a bit behind. So as I mentioned, if we do not mitigate some of these consumer risks, we may end up slowing down the financial inclusion that is happening all over the world. Sub-Saharan Africa will be left behind. So these issues need to be addressed. Thank you.
Thank you very much, Marjorie. Can I ask for this, last few minutes, maybe that all the panelists turn on their video and the speakers also, please. Thank you very much. If you can all turn on your video. Merci de mettre votre vidéo. Merci beaucoup. Merci. So there are quite a few questions about, how to mitigate the risks of over-indebtedness. And I wonder whether one of you wants to talk about this, because Madame Azoma has talked, about financial education. This is, an important part of mitigating risks. Are there other actions that either regulators, digital financial services providers can take to reduce the risk of over-indebtedness? So any of you would like to speak on this front?
So I can start, maybe others can intervene as well. So from what we've seen, of course, we know that Kenya is one of the most developed markets in terms of digital financial services. And the emergence of digital credit, some are also started in Kenya. So what we've seen from there, the digital lenders associations, there are these associations that have been formed in some countries, they're also helping out. So in Kenya, I think it should have been last year, where the association was shaming some of these rogue app providers, digital lenders. Yeah, so that may also help. So industry actors should not just rely on the regulators or supervisors to do this alone. They can also team up together and help mitigate consumer risks for our customers.
Good. And I think we, yeah.
Just quickly to make a comment, I think data is super important. To create data, to know what are the levels of indebtedness from consumers by mixing different sources of data. On the one hand, supply side data that supervisors can collect, including from their supervised entities, but also from other that might be only lightly regulated entities, but still produce data on number and volume of credit. At the same time, regulators, authorities, and other actors can collect and produce data from customers to see what are their experiences when getting different type of credit products, to understand from their perspective the level of indebtedness and probably also the difficulties they have in repaying a different number of credits that they may be getting.
Very good. Thank you, Juan Carlos. Okay, so any other question from the chat? I want to give as much time to the questions from the participants.
Okay, so as we are waiting for the questions, let me also just add in terms of digital.
Marjorie, I see a question from a participant here, if you don't mind. So there is a question about an earlier question for Awelani about the customer outcome approach. How has this approach in South Africa been implemented, was the question. Do you want to give a few details, Awelani?
Sure, I can definitely come in. Yeah, so I think the first approach when it comes to implementing this approach is to make sure that your regulatory framework actually support the principles of treating customer fairly. Once your regulatory approach, it's a framework, it's got that in place, then you make sure that you implement you implement the entire approach in your organization by firstly looking at the licensing stage. When these FSPs comes and seek for license, you make sure that they have to comply with the principles that you have set there, the principles around communication, the principles around product designs, the principles around disclosure frameworks. You make sure that all is in place, but you don't end up there. You make sure that internally you supervise. You've got proper supervision tools to make sure that these organizations are constantly being supervised and making sure that you are compliant. And then you don't end up there, you go to enforcement. Those who are breaching, those who are not complying, you make sure that they are brought to book and some sort of legal sort of ramifications are implemented. So that's how you make sure that everything goes to order. Firstly, frameworks, make sure your frameworks are okay. Then you implement within the organization, start with licensing, and then all the way to supervision and enforcement. And then you're gonna get better results if you do that.
Thank you so much. So we're reaching the end of our webinar. And what I would like to do is just give 1 minute, no more, to each of the panelists for their final conclusion and hopefully some hope in this painting of the global situation. So 1 minute, and I will interrupt you after 1 minute. So let's start by Madame Azoma. Sorry, you're the first. You're on mute, Madame Azoma. You're on mute. Vous êtes, voilà, ça y est. OK.
Oui, merci, je vous remercie. Alors, 3 points, j'espère qu'ils tiendront en 1 minute. D'abord, je pense, pour partir de ce webinaire, nous, en tant que banque centrale, nous sommes encouragés à continuer à inciter les fournisseurs de services financiers numériques à mesurer, à maîtriser les risques tels qu'ils les perçoivent. Et l'étude réalisée par le CGAP apporte un input important à notre sens qui vient compléter cette approche-là que nous avons aujourd'hui. Et je pense qu'il y a 3 bénéfices principaux de cette approche centrée sur les usagers: de fiabiliser les déclarations de risque que nous avons aujourd'hui venant des fournisseurs, mais aussi de nous permettre de cibler nos actions par rapport aux problèmes vécus par les utilisateurs, et puis par rapport au programme d'éducation financière, amplifier la portée de ce programme-là. Donc, je formule le souhait que l'approche du CGAP, notamment cette enquête-là, soit pérennisée et que nous puissions vraiment en bénéficier aussi bien pour le plus grand bien de nos populations. Je vous remercie.
Merci, Madame Azoma. Thank you so much. Kennedy, 1 minute.
That's me, right? Sorry, I was
Yes,
the
that's you.
Thank you. Sorry about that. So for me, I think collaboration is key. We have to work together, both within the private sector and also between the private sector and the public sector. Once we work together, I think we will move in the right direction in addressing the fraud issues that we are facing within the DFS community. Thank you very much for the opportunity.
Thank you, Kennedy. Great point also. Thank you. Awelani?
Thank you very much. I think for me, what I can say, I'll just articulate what's already in play in South Africa. I think the way forward to this is just a collaboration by a broader financial ecosystem to try and deal with these risks that are emanating, because it can't be solely a responsibility of regulators or financial service providers. So the broader ecosystem has to come together and come up with solutions to deal with this risk, because this risk, they are there due to increasing digital financial services, and unfortunately, or fortunately, digital financial services are still growing and still gonna grow for years to come.
Thank you so much, Awelani. Thank you, and I appreciate this notion of ecosystem. So let's have Francis last. Are you still here, Francis? I can't see you.
Yeah. Yes, Eric. And
go ahead.
I had to check down my video. So I guess we're now looking at closing remarks. I missed some bits.
Yeah, you just give 1 minute of your 1 minute of the key point you want participants to take away. If there is a key point that you want participants to take away from you, just 1 minute. You want to say something?
I think it's just a reflection on a question that was asked on why the focus on Sub-Saharan Africa, and my rejoinder would, in addition to what Marjorie had said, is it's seen Sub-Saharan Africa where we've seen technology lift people out of financial exclusion into inclusion. And of course, we know that that has come with all the attendant risks that haven't been witnessed in other global areas. So that's it for me for now. Thank you.
Thank you so much, Francis. Well, we have 2 minutes left, so I'd like to thank so much the panelists. It's been absolutely fantastic to work with each of you. I want to thank our CEO also for her remarks, and of course, Marjorie and Juan Carlos, but also all the people who are behind the organization and who we can't see, from our comms team, etc. So big thanks. We've heard about, all of you on the panelists in particular, about all the variety and evolution of risks for digital finance service consumers. We've heard about frauds in particular, over-indebtedness, web scrapping, crypto assets, Ponzi schemes, a huge variety and lack of transparency, a huge variety of frauds, some of which are increasing, which is very similar to what Marjorie was describing. But there is a silver lining, and we've heard also a lot about solutions. And the beauty is that human beings sometimes are very good at creating problems, but they are even better at solving them. So let's hope that we can find more solutions and that technology will also give us more solutions. I think that, to take an approach that we've discussed, we need to build a responsible digital finance ecosystem, and that will require collaboration, as you said, Kennedy, between different actors and providers, regulators, etc. It will also have a strong focus on customer centricity. It's critical. And I think Madame Azoma has talked a lot about the needs for consumers to be empowered on this front, and the financial education, etc. And of course, we need to build the capacity and the capability of all the providers to be more responsible, whether it's mobile network operators and others. So on these words, I would like to thank all the participants for all their great questions and say goodbye and à bientôt. Thank you.
Thank you. Goodbye.
Bye, everyone.